Hello everyone and welcome to the PivotBoss Monthly Market Outlook for February. This is February 4th, Tuesday, and it is now 2020. So February 2020, second month of the year now underway. The second trading day now under the books or in the books here for the month of February, and a lot to talk about here as we look at this market. Obviously these markets really roared back pretty strongly here today after yesterday's attempt to kind of pull back from those highs. But that's it's a pretty heavy and strong market to the upside in a lot of respects, and we'll get to a lot of these charts right now. So the goal here is to look at some of the higher time frame analysis here for a lot of these futures markets. Look at any stocks that you may have interest in, and then from there also provide a list of stocks that you can look at on a swing basis, either for the next week or the next month of trading, and in some cases the next 2 to 3 months of trading. I like to find different candidates for all different types of traders as well. So let's go ahead and get started right now with the February monthly market outlook. If you take a look here, the ES obviously second trading day of the month and a huge move up. Now let's back this thing up real quickly, and I will be going a little bit fast here as well, just to we got a lot to cover here, so I will go fast. Maybe try to keep it within 40 to 45 minutes here and have you on your way. This is being recorded so that you'll have all the candidates ready to be replayed again. One thing I find very interesting here is this compression pattern right here that played out. That compression pattern, that's something we talked about last fall, and how we had many months built up in that range. Call it 1, 2, 3, 4, 5, maybe 6 months, right? 5 to 6 months of built up energy. And what we talked about was if we get a breakout, then it could spark 3 to 5, maybe 4 to 6 months of trending behavior. You know, this right here was the first month where it broke out and continued higher. A pullback here to the pivot range, you buy the dip and it continues higher. Pull back to the pivot range, buy the dip, and it continues higher. That's 1, 2, 3 months, and here it is again, the fourth month it's pulling back to the pivot range, and right now we are seeing it rally again. Only the second trading day of the month. We got to see if it can hold. But again, this type of compression here leads to expansion, and again, you can usually use the timestamp here. If it's 5 to 6 months of development, then you'll get 5 to 6 months of trending behavior. Not always that many, but you can get somewhere in the order of 3 to 4, 5, 6 months, and certainly sometimes well beyond that in rare cases. So very nice buy the dip. So this thing has been within a mature trend, right? This is a very mature trending market. But one thing we had here was a higher value with a change of bias. So this is the monthly pivot range right here. For those of you who know my book, Secrets of a Pivot Boss, one thing I talk about is the pivot range. And the pivot range I learned from a trader who wrote about it in his book, The Logical Trader. Fisher wrote about it and used it in a different way than I use it, but I still use this range and found many different ways to use it, including pivot trend analysis. This pivot trend analysis is very powerful, because when you're trending in a certain direction, like up, you can use the pivot range like a staircase and buy the dips at the pivot range on the way up if you find those stocks or markets that are going to tend to be trending. So that's one thing to keep in mind here. Now, one other thing to keep in mind is that these trends don't always last. At some point they come to an end, and one of the ways they look like when it comes to an end is you see a higher value relationship develop. So this pivot range right here is higher than the last one, but then the close of the month is below, and that's what happened this previous month. On Friday we had a big day down, and that closed the month below, and that was an indication of weakness to come. That usually can lead to selling pressure. In this case it did not. It started to yesterday, but overnight after hours trading, big time strength here out of the ES and the NQ, big time move, and here we are sitting above the previous week's high by a little bit. We're sitting above the FOMC key level from January 29th, and that's going to be an important FOMC key level to watch. 32.86 half. So here's the FOMC key level right there. It initially went offered, then it went bid back up, then offered, and now it's back at it and above it. Not the cleanest look compared to what we've seen recently. So if you recall, one thing we were talking about before, especially in the pre-market videos for those of you that follow those, we talked about how in 3 of the last 5 or 6 markets here, we've seen selling pressure. So here's the FOMC right there. May 1st, it's sold off. Then it comes back to it. Over here, July 31st, sells off. Then it comes back to it. And then this one right here is September 18th, sells off and comes back to it. That's version 1. That's V1. V2, if you will, is when it goes bid here. So this is one that happened in October. It goes bid immediately. If it comes back to it, it tends to be bid again. In this case, higher, low, and go. Over here, it came in again, bid right away, higher, low, and go. And then you can also add this one over here. This is one where in June, it went bid, quick retest, and bid. So those 3, right? So of the last 6, 3 were like this, and 3 were like that. This one right now, who knows? It looks, it looks like it wanted to take it offered, right? It looks that way here. And now it's zooming back up. It could still take it trapped and offered. And that's what happened on that day here and also there on the second day after or third day after, where it came back up, trapped above it, and then sold off. So again, this market's very, very bullish. It's not easy right now because of the volatility is increasing tremendously. Look at the size of the bars here and here and there and there and there compared to what we had seen here. From last Friday, or well, not last Friday, 2 Fridays ago, and including last Friday, those 2, that big time increase of volatility and everything in between, quite a bit different than what we'd seen before. So again, that suggests that this thing could increase in volatility further to come. So that's going to be something to keep in mind as well. So right now, keep in mind this market's still trending up. Obviously, some markets are way more overextended than others. Think Tesla, for example. And then some still have quite a bit to go because they've come from lows, like ATVI, which is a candidate we'll be looking at here later on. So just some higher time frame analysis to go along with this, showing the compression here that led to the expansion, the multiple trends up month over month. And then where this trend breaks down is if we get a close below the midpoint of the previous month's range. And that's basically the bottom of the pivot range here, or is it the top in this case? So really, if we close below the bottom of this pivot range, that thing starts to go downward pretty quickly. So right now, everything still looks bullish. So just keeping that in mind. NQ here, very similar price action as well. But this one exploded through the highs and rallied to a new all-time highs through 9,300, above the previous month's high. And you know, again, this looks frothy. I mean, the way that this thing has happened, I would say that obviously everything continues to point higher until proven otherwise. But if this market were for some reason to have some overnight news or some headline or some earnings or something where price were to gap open below, say, back below the previous month's high, or worse, back below this midpoint of today's session, that would be very bearish. That would be a big trap day, and this thing would slingshot down very, very quickly. So again, that would be a way in which this thing would show weakness. I'm not saying it will. That's just something I'll be looking for. If it starts to aggressively drop back below here or opens way back below that level, that could be an indication of something to come. Right now, everything's still pushing up. And even if this were to pull back 9,200, likely still a short-term buying opportunity. So those are looking pretty good. One thing that looks a little different here that has picked up is RTY. So RTY, again, had quite a bit of trouble getting beyond the 1620 zone for a long time, and then eventually got through it and exploded through that level. Right, boom, here, came back to it and got up here. While the ES and the NQ up here near highs, this one sold off quite a bit and is only just now bouncing a little bit. It's going to be interesting to see, can it continue to hold 1620 as it is now? Because if so, it could continue making its way up towards 1740 and that 1750 zone up there. But right now it does have some initial signs to keep an eye on, and that's kind of this head and shouldery type of development that's currently at play. Again, got to see how it continues to play out, but if that does start to show weakness up here on the right side, that could be an indication that we may dip a little bit lower. So we'll continue to follow that one. Crude oil is one that's been significant here because it has hit the lowest lows that we've seen in over a year. This one you could really count on a bounce between 50 and 51 lately. It's just what you've come to expect ever since crude oil rallied back above that to begin last year. That zone had become support each and every time and bouncing pretty nicely every time. This time we obviously had a pretty significant geopolitical event here. Caused a spike back to 64 to 66. And again, this is the upper end of the range up here where we've seen rejection lead back down. And that's exactly what happened here. We talked about it on that day. This is probably the biggest day that has happened in at least the last 5, maybe even 10 years in terms of size of range. One day alone, just tremendous size. What we talked about before was after that day we would likely see some narrow range days followed by a continuation through 57 and into the lows. So a very nice continuation here. That was just tremendous. Now we have to see, is it going to make a move back up, because 2 days running now it looked like it wanted to try and it failed both times at the previous month's close. Now below the previous month's low and is working its way downward. Again, there's clear air below. So if this is support that's held for quite a while here, there's really nothing else down here till you get about right here. And that's about 42s, 42.5. So really there's nothing but clear air between where we are now and this recent low if it really wants to go down there. For me, I've been of the opinion that we would likely reject this key range low and work our way back to 57. So I'm still watching for rejection, because if that were to happen, it would be a quick bounce back. But if this thing gets going harder to the downside, then it's going to be clear that any pullback is likely a selling opportunity, and that could very well be the case already. It's already hard. The mere fact that we are at an edge is the only reason why I would contemplate a long right now, is just because we are at the edge. So if we do see a rejection, and when I mean rejection, right? That or this or that, right? It's one of these hard turnarounds down here. It's one of these. It's a rejection. It's not anything else. It's a hard turnaround. That is where you may see this thing come back. But other than that, you got to be careful jumping in front of this runaway train to the downside, because again, open air and clear air down to the downside. Now, one thing I do want to bring up is the weekly chart for this one, because the weekly chart has stayed, within a very clear zone with regards to the profile. There it is right here. That's the value high, value low is way down here. Here's value, and again, this is a 10-year profile right here, 10 years, I believe. And so, if we've just come down kind of from the upper end of this profile, then we could theoretically come down to the lower part of the profile, which means not only testing 42s, but maybe even washing out a little bit lower. I mean, can it get between 38 and 40? It's gotten down here before. It could easily do it quickly and jump back. You never know. So just wanted to keep a higher time frame look at this, because I've been watching that key range low for a rejection, but if it don't reject there's some easy downside targets that could be hit. 42.25 is the next major downside target. So that's still 7 handles from where we are, and it could get much more significant if it wanted to. So again, not saying it's going to do that just yet, but breaking that key range low is very important. 50.6. If it can't get back above that zone soon or stay above it soon, things get ugly in a hurry for this one. Thoughts right there on crude oil. I also wanted to talk YM real quick, and then we'll jump over to some stocks. YM has been trending higher very nicely. If you look at this thing on a weekly time frame, you can certainly see it's really exploded here lately. It's kind of on this path higher like this. You got that thing going on here. That 28,000 level is going to be very important. You're up here kind of trading in this zone right now, but if it fails that zone, you start to work your way back into the range, and that's where at least this midpoint here has been like a magnet, and that's 25K. So again, don't want to be overly pessimistic here. This market is still going up, but even if that move happens, it would still be in line with the overall trend of this market in recent years. And you have the 200 coming up to that zone. So again, that's just going to be something to keep an eye on. If it fails to hold 28K, holding above that zone suggests much more strength. But if there's some sort of rejection, for example, look at this head and shouldery type of thing happening here. If this thing breaks down through here and can't hold 28K here, then it's a quick move back toward 27. With a shot to go lower, right? 25 would be the middle of that larger range. So just something to keep in mind from a higher time frame perspective. Okay, let's jump over to some stocks here. I'll start with some of the long stocks. Let's go with, and I covered some of these or most of these here in our trading room, and then I've added on to it as well, especially on the downside. On the sell side here, this is WY. I like WY a lot. This one is one that has a shot to do really well. It didn't finish the day as strong as you'd like. It had a signal here early on, which means it met the geometry of what you wanted for that bar, but it didn't quite do it. It closed just lower above the 50% zone, so not quite as strong there. But what I do like about this one is the fact that it has taken out the previous month's low here. It did take out 2-day lows, took them out pretty harsh, and then bounced back pretty good. It did give some back late in the day, but it has the makings of a potential snapback coming. This is off the 200-day moving average as well, and typically that one's been bought here recently. You can see right here, it went above the 200, came back, support, and now it's back at it. So again, this is also a breakout point here that we have from that zone, and it's at the top of the key range. So all of these things suggest that there could be a nice little snapback that comes, and there could even be a longer kind of push that follows behind it over time. Again, not the strongest finish here today, but certainly one worth watching here. If it can stay above 27.75, 27.5, it has a long-term shot higher. Failure to hold that zone, and it's off the candidate list that fast. J right here. This one is one that's very similar to how I spoke about the ES earlier with regards to the compression that led to multiple months of trending behavior. This is the same behavior here. You have 1, 2, 3, 4, maybe 5 months of trending compression after trending behavior, and that right there suggests it's building energy. And we could look at the next multiple months of strength ahead. If it can get a breakout here soon, this could be month 1, month 2, right, month 3, right, month 4, and we're rallying into May, June. So it could easily get a major breakout that leads to much more strength ahead. Again, as I usually mention to our room, that trying to anticipate when a breakout is going to occur can be very difficult. But this one is one of those ones right now that could certainly do that. It could certainly get that move here pretty soon based off of how today's shakeout looks. So keep that in mind for one. That could be a multiple month move higher over time. ATVI is one here. Now, of all of the ones that I'm sharing here, I kind of like this one the most. From the long side perspective, at least, this one has earnings coming out after the market on the 6th, so that's Thursday after the market. What I like about it here is the outside. That's a bullish outside bar, the way I define it in my book, where you have the low below the previous low, the close is above the prior high, and the range of the day is greater than average, so it's a larger range than average, more significant day. That's a really bullish rejection. And then it's not just the bar, it's also where it happens. Where does it happen? In this case, it took out the previous month's lows and snapped back up. It also retested previous month's resistance and snapped back up, the LVN. It's about where it occurs. And that's a really, really good one right here. It does have earnings coming up again Friday, and so that's going to be important. But what I like about this one is it's had a long kind of recovery, a long accumulation phase. This has been year plus in the making, where it's accumulated down here. It's been able to negotiate back above the 200 and hold it on retest. It looks as though it's ready to take the next move. I'd say we could be headed much higher toward the mid 60s and perhaps as high as 70. So it could be a very nice continuation ahead. Now, as I'll mention with any of these, again, especially if you're not familiar with how I approach these, this looks really good, but as soon as it fails to hold the midpoint on the closing basis, I take it off the watch list for the most part. In this case, perhaps you may even use the LVN, but if it can't hold that zone, it's pretty much done, and it's over. You move on to the next one. So this has a really good long-term potential, and one to keep on the list here. Another one is BP. This one had a really good, there it is right there. That's a really good island reversal here off of major support. Major support down here off of 36s. It closed well below that zone. This is multi-year lows, and then it opens today with a huge gap way back above. Clearly, squeezing whoever was trapped down there late shorts. And now this has a shot to rally back toward 40 on a short-term basis, or maybe 39 to hit the 200-day, but somewhere between there could be a very good short-term move. And what I mean by short-term is somewhere, over the next 2 to 3 to 4 weeks. But beyond that, because of where we are, it could certainly make a move even higher over the course of the year, perhaps, if it can push through 40. So that's one to keep an eye on. GOLD is another one. I like GOLD as one that could see major expansion ahead. It has earnings coming up. It kind of gave a little bit back here late in the day as well. But this is one that's been coiling for a while. Coiling, came back and took out some lows today, kind of a shakeout, and then turned in a pretty sharp reversal. That could be suggestive here of a breakout to come. So that could be pretty significant here if it can start getting through 1950 down the road. But one to keep in mind. Again, may not break out soon, but it could be due sooner than later, especially with earnings on tap. NUE, this is Nucor. Couple more longs here, and then we got the short list to look at. Nucor is very similar to BP here. This one has very clear support down here at around 47.50 rather. You got resistance between 57 and 58, and we've gotten a nice little move away from that zone here today with a nice gap up. Again, just based off of this range here, based off the support and how we've pushed off of it, earnings is behind us. This thing could easily get a move back toward the center of the range, which is about 52s, and then over time again may work its way back up across the range. And last here we got Newmont. Newmont has pulled back into the range here. This one again trending higher. You can see how nice this trend has been. You can also see that we've had higher value relationships here. And so when it pulls back and goes, it's a buy the dip. And we're seeing that behavior now. It could be another buy the dip. Now, very similarly to what I talked about gold this morning in the pre-market video, if it fails to hold that bottom of the pivot range on a closing basis by the end of the day, then you're likely going to come back here. But as long as it can hold that zone, it can even drop below it. As long as it pops back above it by the end of the day, it could be a great buy the dip opportunity here for a continuation higher. So that's another one that could see a short term. This would be one of the shorter term ideas that could be, say, a 1 to 5 or maybe a 3 to 7 type of day move. All right, lastly here, let's jump onto the sell watch list. I added a few here to this one as well, and in addition to what we looked at a little bit earlier. ENB here, this one is at a kind of a longer term resistance level. It's not the cleanest. It's been very, very strong, this one. But if you look at, that right there is value. So that's composite VPOC right here. And the last few times it's tested that level after chopping around it, it's gone offered and offered and offered. Over here, again, right? Offered, offered. Got close to it and offered here. And then the first time it tested today, sold again. Sold again pretty hard. And each time this thing has dropped, it's dropped, easily back towards, say, 38. Off that zone, easily back toward that zone, and can potentially even go below it even farther. So this is going to be one to watch at this area. Again, it's been a very bullish and aggressive uptrend, so you got to pay attention to the cues, and the cues are always the midpoint of the rejection day, right? That's a great retest entry. So if the market opens below that level tomorrow and rallies to it and drops off of it, it's a good opportunity to get in off that zone and look to push downward. If price closes above that zone by the end of the day, you could be out same day and take a small loss, be in and out, and be done, right? But most of the time, it's the midpoint, right? Right here, rejection, that's the midpoint entry right there, and it goes higher. If it were to have closed below it, you take a small loss, move on. Over here, same deal, rejection. There's your midpoint. It came close, right? Still an entry opportunity, and then drops, right? Over here, this one gaps down below it. So at that point, I probably wouldn't get in at the moment, but you can still work off of it at some point. Now, this is one where price opens below the midpoint, and again, just like over here, I would not enter at that point. It's no longer valid. Oh, good question here. Anyone know where you can find the old monthly videos? If you go up to PivotBoss TV, that button, you will be able to find them. You have to go back and dig a little bit, but another way to do it is to go to the website and search for Monthly Outlook in the search box, and it'll pop up the monthly outlooks as well. So those are a couple of ways to do it. If you're a premium member, then I believe there's a special playlist at the dashboard somewhere. Okay, let's see, RDN. Here's RDN. This is Radian Group. Now this one has a nice rejection that has occurred up here. The reason I have this one on here, again, is as a sell candidate, is we're up here in this zone where it's been holding above this resistance level. It's formed this little range, and then now after a minor higher high failure and drop, it's now coming in here and doing it again. And if this thing leads to a push downward, it could be a great quick swing move. But if it breaks 24s, it could be a much bigger move to come, because it's a market structure breakdown, and now you go down to the previous market structure support level, which would be about 22. So there's two trade ideas here. Number one is when you have a narrow month like this, so that's the previous month's high, that's the previous month's low. So that's the highest high and the lowest low of the month. Very narrow. When it's that narrow, there's a tendency for the market to take out both sides of the range. Because it's so narrow, it's so easy to do. It comes up here, shakes folks out of that side, and then it slingshots and comes out and takes out this blue line, that low. So that's the short-term idea. That's the 1 to 3 day move, 1 to 5 day move. But then if it breaks through 24s, that's where things get very interesting, because there's another 2 handles down before you get to the next target zone of 22s. So a couple of thoughts on that one. HPE is another one. Now this one is a classic PIMA pullback trade, also a classic lower value trade as well. The PIMA pullback is basically your moving averages here. I have the 8-period pivot-based EMA, and this is the 21. And this one is the most important to me in this current market. That's why it's gold. 21 is very good as well, and it gives you a zone. So when that zone is trending downward, your thought should be to sell the rips at the zone. If the zone is trending up, your thought should be to buy the dips at the zone. And so right now we are showing a rejection signal in the zone. It's also lower value relationship with the pivot range, and it's hitting those pink lines. It's a double whammy. You also have the rejection signature, triple whammy. So all of that suggests that it at least comes out and tests this low. So we're looking at a drop downward that could take us down toward perhaps as low as that value line down there, maybe even down toward the LVN at 1240. Great quick short-term seller right here. Again, this is one that could be an easy 1 to 5 day move, but it could also be a 2 to 3 week mover as well if it gets going. CL is a good one here. This one also coming up here near resistance. If you look up here again, 76 is big time resistance, up to as high as 77.5, and each time it's gotten up here, oh, there it goes. Each time it's gotten up here, it is rejected pretty good. It came up here, it got a little bit higher each time, but each time it's dropped, I mean, it's been a pretty clear move to about 70. Right now we're trading 75.40. We've just put in a top at 76.20. If this is an impulse high, again, we could snap back very easily and get going back toward that 72 with a shot to hit 70, maybe a gap fill, maybe back to value. But this one is one to keep an eye on from the short side as well. And keep in mind, again, say tomorrow this thing were to open at 76.20, then that sell idea is off the books already and done, right? It's just not even, I'm not even looking at it anymore as that idea. Instead, the opposite probably should be the case. If it gaps up above like that, it's probably about to explode higher. So again, that midpoint's always the barometer there. JD is another one here to keep an eye on. Got about 5 more candidates here to go through. JD is one, again, Chinese stock here, trending higher, and right now showing a bit of a lower high. That's a pretty strong high. It's all coming into about this high as well, you know, 41s, a little bit of a dip here. You know, you got the obviously coronavirus outbreak and all that type of thing could be hurting stocks, or had been at least in some way, and could get worse. We don't know, it could get better. But this lower high right here, again, could be an easy snapback type of play here if it can't get back above 41s pretty soon, or even the midpoint of this rejection bar. So lower high play, when it's a lower high like that or a higher high rejection, the goal is usually snapping it back to the recent support low. So it can easily come back to these lows, or at least the gap fill for the month. Overstock is one here. Now, Overstock is one of those long-term ones that has kind of a lottery ticket feel to it. It had been beaten up. It was one that we had as a long candidate last year. Right here. Oh, wrong button. We had this as a candidate that could potentially double from what was it, 11 or 10 bucks up to 20. 12 bucks up to 24. We had a couple different zones here. It exploded. Then you had the CEO talking daffy, and then that, you know, the whole thing happened here. So then it got beat down, right? So over here, you're seeing a bit of a signal here. You're seeing accumulation perhaps occur below all of the lowest lows. Usually this thing would come down to about 10 bucks and then explode off of it. We're below that now, and this has been a one that you could typically rely on for bouncing off that $10 zone or thereabouts. Here's 10 bucks right here. There's 12 and change, and you can see how this thing has launched before off this area several times here. Right now we're looking at something that could explode again at some point and lead to a rally back up toward 25, maybe as high as 30 at some point down the road. So right now it may be the early stages, but you can see how last time it was trading just below that low. It accumulated, and that's why we had the goal that we did. Now it's doing it again, but in bigger fashion, and maybe it has a higher goal of 30. So again, this is one that I would put on that point where you can look at it kind of as that lottery type of trade, where at some point here, if it gets going and breaks back above 10, it probably has accumulated enough, and it's probably on its way back up the path here. Just think, if you just got this from current price back to value, that's more than a double. So again, one to keep in mind here from a longer term perspective. Again, you got to be careful with one like that. Yeti is another one here. Yeti is one that now this one, I don't know why I had Overstock as a sell candidate. That was on the sell list. That was a long candidate, clearly. Got moved to the wrong list. Here's Yeti. Now Yeti is one that has formed a kind of a doji type of pattern up here at these highs. You can see, I always like a higher high failure, right? This thing comes right up here, hits a high and backs off, then it comes up, takes out the high and backs off. And then now you've done it again over here where you've come to this high right there and you've come and take it out. Is that enough to take it out and now drop back down? It's had a really good time coming back toward the 200-day time, and again, perhaps it does that again. A little bit of a doji where that's a day where you tend to see folks come into the market, they get a bunch of folks long at new highs, and then tomorrow they run the stops through the lows and it's a huge day down, right? It's that day right there. And today is that day right there. Today is this day, and that's the day I'm talking about. So if tomorrow starts to break back below that previous month's high, it could be a quick day down. It could be that day right there. And then that could trigger a bigger day back where the first target would be the midpoint of the previous month's range here, followed by this zone right there. Another one I like is APO. APO has a higher value with a change of bias signal. That means that you have higher value, higher value, higher value, and ideally you close above it and then pull back and bounce and go. In this case, it closed below it. So when it closes below it and bounces into it, it tends to be rejected. And so the first signal is rejected here. You can see a sell signal coming in, and now that pivot range is being used as resistance after it had walked its way higher. So this one, again, if it can't get back above 48s pretty quick, this one might have a stretch move where it could drop downward back toward 42s and maybe into that 200-day right there. And the last one here is BAH. And BAH, oh, good question here. I'll answer that for you in a moment. BAH right here. You can see again, this is one that came up through this high right here, came up above it, and then a couple of days ago with a big rejection, a couple of absorption days here, and this is one that, again, if it can't hold that high, it's probably going to work its way down. Some clear air here. Not as clean as some of these other ones here, but certainly if you look at this from a higher time frame perspective, you could, and have a kind of a longer term idea for it, you could certainly see how this rejection, the way it's developing right now, could easily lead back to maybe as low as 67.5, something like that, if it really wanted to, and anything in between. So that's one right there, again, for those of you that want a bearish component to your positions. This is one to consider as well. I really like some of these candidates. ATVI is really good. I like Overstock as kind of that little intermediate candidate that could turn into something significant. APO is really good. A lot of good stocks here. We'll see how they play out. A really good question here by Ben. How do you work around earnings with these positions? I noticed a few of them have coming up. So there's a couple of ways I go with earnings. Number one, the safest thing is to stay away unless you really know what you're doing or how to position around them. Number two, it depends on how long I've been in the position or if I'm even in a position. So for example, I don't know, just bring up something like Apple or something. For example, if this thing is say this pullback here and we got long here and we're in the trade, and then earnings is coming up. Well, I've already been in the trade for a while. It's already done quite a bit. I've probably already taken 3/4 of the trade off or something. If that's the case, then I may just hold that last portion on because I've already booked profits on those first several and then let it do what it might do. So that's a way I go. Another way is if say if earnings comes out here or right around there, and I see a rejection here, I could already have something that I'm playing that I play off of that, so afterwards. And then there's the ones that I play right beforehand, in which case many times I like to do credit spreads when that's the case. Unless I really, really like the business or the company, or I know they're about to really do well. There's certain times where that business is going to crush, whichever one it might be. And in which case, then you could be a little bit different with the strategy. So those are several approaches that I use at times. I think it mostly depends on how much risk do you have on that you're comfortable having on. And if I have a full position on and it hasn't gone anywhere, I'm not going to be usually comfortable with that. So I'll get out probably ahead of time or lighten the load. If I've gotten in already and again I've profited quite a bit, then I can leave some on just in case to see what happens.